Mr. Anil Rai Gupta, Chairman and Managing Director with Havells India. Mr. Rai, good morning. Thank you for joining us. This quarter we know has been weak due to unprecedented events. But going forward, give us a sense of where are you seeing green shoots, and in a sense now that lockdown has lifted partially, are you witnessing a revival in demand?
I guess what I would say is that in the first quarter, while obviously everybody is affected by the pandemic, but when the things opened up in the first week of May, and the demand started stabilizing in the second half of May, it actually turned out that a few things happened. That the consumer demand, there was a little bit of a pent-up demand. The smaller towns started doing better. So the demand scenario was decent in the month of June itself, especially on the consumer product side, more so than the industrial products, because where the demand was a bit tepid. July also, the underlying demand seems to be fine, but it is being affected by constant shutdowns and lockdowns and shutdowns in certain areas. So it could impact the production also a little bit, could also impact the demand in certain markets like Karnataka, Kerala, Bihar, Odisha. So things are still, I would say, a bit fluid right now, but it is not as bad as what we had expected at the start of the year when it looked as if the demand will take a long time to come back. So right now the demand is solid, except the fact that it's being affected a little bit by the constant shutdowns.
Loss of sales in the peak months of April may have dented Lloyd's revenue. But now that the main air conditioning of the summer season is over, what's your positioning for Lloyd's, and then do you have a revival plan in place?
March and April are the biggest months for air conditioners, and unfortunately Lloyd lost that part of the demand. So almost like 30-35% of the sales come during those 2 months for air conditioners. But if you actually see the intrinsic strength of Lloyd, as when we started our factory last year, earlier Lloyd was dependent upon imports from China. We set up a very large-scale manufacturing facility in Rajasthan, and that came fully operational sometime in November last year. Since January, we started seeing quite a good traction in terms of factory-made products, and we were growing at a pace of almost 45-50% in January and February. March and April happened, but I'm quite satisfied with the performance of Lloyd, especially air conditioners, in the month of May and June itself. It cannot take care of the demand for the month of March and April, but yes, that's fine. Going forward, we are seeing good growth over last year in terms of Lloyd air conditioners.
Right. Mr. Gupta, but switchgears, cables and lighting, these segments were going through tough times even pre-COVID. What are you expecting in terms of a recovery when it comes to B2B orders, and how is it that you see them growing in the next few quarters to come?
Well, switchgear and lighting both have almost a 70% component of B2C as well, which has started off well in the month of May and June and continuing in July. B2B and B2G are slow right now. Things are coming back on track, but June was definitely slow. So if you try and divide the consumer versus industrial or consumer versus professional, we would say we actually saw growth in June over in the consumer segment, but saw a little bit of a degrowth in terms of professional segment. So that will take a little bit more time than normal, but I believe the demand scenario overall should be good in the coming quarters. It will have its ups and downs only because of the situation of COVID.
Right. But Mr. Gupta, as people stayed indoors, kitchen convenience also took preference. And there was a surge in demand. Has this continued in the month of July as well, or was it that initial blip up that one saw?
I'd say pent-up demand also because of the fact maybe some sales were happening in smaller towns in the month of April as well. So there could have been a little bit of a stock filling up in the month of May. But for that sales to continue in the month of June and July, I don't think that is really a pent-up demand. This is underlying demand scenario which is improving in the tier 2, tier 3 towns and the rural areas. And I think this should sustain for some longer period of time as well. So I can't really call the demand of today as a pent-up demand.
Faster than urban. We've been discussing that. So what's the demand in rural or tier 2, tier 3 cities? Are you expanding your distribution in those areas?
Well, this is an ongoing exercise. In fact, Havells has been prevalent, has had a strong distribution channel in the tier 2, tier 3 towns, and we have been building a rural channel also for the last couple of years. So this is going to be a continued exercise. This is not something which is a post-COVID exercise which is starting. In fact, if we have gained anything in the post-COVID scenario, is because of our entrenched distribution channel all across the country. It's not that the metro towns will lose its focus, because they will come back once the lockdowns are completely opened up. So they'll also have their own intrinsic demand. So I guess there'll be a continued activity of better availability and delivery across all parts of the country.
Okay, so apart from distribution, you'll have to work around product positioning across price points as well for some of these markets. What's your strategy there?
Well, you'll be surprised to see actually tier 2, tier 3 towns are not really price conscious in terms of electrical products. They are buying good quality products now. A large part of their income goes into building a house, and so they don't want to compromise in the quality of the switchgear or the wires they're using. And Havells is a mass premium product company, so it's not really a luxury brand which cannot be sold into rural areas or small towns. In fact, we are very suitable for tier 2, tier 3 towns as well. And also we have various brands cutting across not just pricing segment, but also different product specification segments. So we have Havells, we have Standard, we have Rio brands, which cater to different segments of the market, not necessarily price oriented only.
What is the current inventory lying with you and your dealers, and have you seen the channel inventory easing out?
Well, actually, because of the demand scenario in the month of May and June, the inventory levels are lower than pre-COVID levels. Even in the products like air conditioners, where a lot of inventory got pushed in the months of January and February for the season time. We believe coming out of the season, the inventories are at an all-time low level. So inventory is not a concern both for the company or for the trade network.
One easy way of cutting costs for companies is that you cut your advertising expenditure. Are you thinking something on those lines?
Well, this particular quarter is not comparable because this is a quarter where we've cut down our expenses to see how the demand pans out. We'll continue to have agility in our system and keep looking at how the demand scenario pans out. And as and when the company is able to put in more money into brand building for the future, because in our business, brand building is done for the future, not for the present day sales. It's not really a impulse buying kind of product category. So when things come up, we will be definitely improving our marketing communications budgets as well. However, you would also realize that the habits are changing, the media consumption habits of consumers are changing. So this will have to be relooked at completely to decide on what kind of advertising percentage levels of expenditure would continue to go on a normalized basis. So that's something which is a few months away, and we will keep having a close eye on how to view the media in the coming times.
Mr. Gupta, pleasure having you on the show today. Thank you so much for taking the time out and speaking with us, and we'll chat again soon.